Hello, I'm Jessica Ewell, the Chief Financial Officer of Royal Dutch Shell. Today we announced our first quarter 2018 financial results. I'm pleased to update you on our results and key messages. Our Q1 2018 earnings on a current cost of supplies basis, excluding identified items, were $5.3 billion, $1.6 billion more than the same quarter last year. Our strong earnings this quarter were underpinned by higher oil and gas prices, the continued growth and very good performance of our integrated gas business, and improved profitability in our upstream business. Less favorable refining market conditions and lower contributions from trading impacted the earnings of our downstream business. Cash flow from operations in the quarter was $9.4 billion, and excluding working capital movements, this was $10.3 billion. Our free cash flow for Q1 2018 was $5.2 billion, with an average Brent price in the quarter of around $67 per barrel. We continue to upgrade our portfolio through performance improvement, new projects, divestments, and the development of new businesses. In the quarter, we announced one of our largest U.S. Gulf of Mexico exploration finds in the past decade from the Whale deepwater well. We also won 9 exploration blocks in the Mexican Gulf of Mexico. This win, depending on future exploration success, gives us a competitive deepwater entry into Mexico and an opportunity to add a new deepwater heartland to our portfolio in the 2020s. Elsewhere in deepwater, we won 4 additional exploration blocks in Brazil, and 2 of these blocks we will be the operator. After the end of Q1, we announced the final investment decision on Vito, our latest deepwater development in the Gulf of Mexico. Since 2016, at a headline level, we have completed $26 billion of divestments, and we have a further $6 billion either announced or well advanced. Moving to our financial framework, where we continue to maintain capital discipline. Capital investment, including organic and inorganic investments, is expected to be in the lower part of our $25 to $30 billion range in 2018. Return on average capital employed for the quarter was 6%, excluding identified items, up from 3.3% in Q1 2017. And gearing at the end of Q1 was 24.7%. Our dividends paid in the first quarter of 2018 were $4 billion, reflecting the first quarter of our full cash dividend since our decision to cancel the scrip program in November last year. Let me summarize. In Q1, we continue to demonstrate that we have a strong financial framework. Our commitment to capital discipline is unchanged. We're making good progress with our $30 billion divestment program, and our outlook for free cash flow, which covered our cash dividend and interest this quarter and over the last year, is consistent with our intent to buy back at least $25 billion of our shares by 2020. Thank you for watching.